Broadcast. Welcome to episode 26 of the Zaner MarketCast, your one and only spot for all of the agricultural market news. My name is Joe Nikruto. I'm here with
Dan Hussey. How's it
Dan.
going,
How you
everybody?
doing?
Good, Joe. How about yourself?
Really well, really well.
Good.
Hurricane in the middle of the country. I'm looking at a weather map, and there is a hurricane in Indiana and Illinois, or rather the remnants of the hurricane.
Yeah, we haven't gotten much weather yet, but the wind is starting to pick up. I'm looking out the window. I'm waiting for that rain to start up and just going to ruin my weekend. But we had a great week of weather. I can't complain really myself. Spent a lot of good outside time with
Bless you.
and with those windows open, it is hay fever season, everybody. And Danny Boy's got allergies for sure going today.
Dan,
Maybe that was a bad idea.
before we start, we want to let everyone know that if they are interested in hearing about grain market movements and strategies daily, you can sign up for our Ag Hedge Hotline hosted by expert market strategist Ted Seifert. It's totally free. It gives you the chance to connect with us personally if you have any specific questions about the markets or agricultural commodities as a whole. If you're interested in learning more about how price action works and how to make price action work for you, it's a perfect way to take a first step. And we're more than happy to speak with folks. Link is in the description below to sign up for that. Dan, why do I like it so much?
It's free, baby.
Totally free, no risk, no obligation. You can sign up for that Ag Hedge Hotline and get up to date almost daily by Ted Seifert. So, Dan, you are dodging the hurricane, but you are right smack dab in the middle of new baby storm. How's that coming?
Yeah, he's great. I mean, the nighttime he's on a regular schedule, right? Mom and dad, we can't complain about that, right? He's not sleeping through the night. But hey, we know when feeding times are. We've got our little routine down and things are going well. So a
That's
little behind on
terrific.
the sleep still. Can't wait to catch up on that. But
Should
I
only be
know
another 20
I know I'm
years till you catch
years
up.
away from
Yeah,
that. Yeah, there you go.
20 years, you start catching up. Yeah. Yeah. I'm going to do
Exactly
my
right.
second college visit to see my daughter in, I think, 3 weeks. So I'm
Okay.
averaging about a week and a half, 2 weeks between visits. I think that's pretty solid for somebody like me. I'm just going to have to drive over there and check it out again and make sure she's got all the supplies she needs. But that's about the extent of my weekend action. How about you guys?
Very good, very good. Yeah, we don't really have big plans. I think we still have some. Now we're into all the extended friends wanting to come over and meet the baby, so we're just hanging tight, and people are coming to us, and so yeah, it's been good.
Totally cool.
But yeah, I mean, we're getting ready for some weather here, right? This is going to bring some otherwise adverse weather. Kind of stay inside. Fall is upon us, right? I mean, the summer is gone. This last week we spent some time outside, and it was good, but oh man. Uh, this could put a little bit of a hamper on, harvest through, Ohio and through Indiana, I would imagine, right? We're probably at a standstill here for now the next week.
I'll tell you, Dan, it looks that way through. I think that you're gonna stop in most of Ohio, a good
Yeah,
portion
Ohio
of
River Valley is
two-thirds
going
of
to.
Indiana, and central to southern Illinois, a big chunk of Missouri. So we'll see. We'll see how that was pretty fast moving, right? As it came up
Hmm.
off the coast into the Midwest. We'll see how long it sticks around, but maybe a day or two. What do you think?
Yeah, yeah. I mean, enough to get some rain on the ground and some wet conditions, right?
For sure.
Put some puddles out there, but we had a pretty good close for the week in the markets. I mean, that couldn't, I don't want to say that rain and that weather is a reason we're rallying here, because I don't think it's the North American weather that was affecting markets as much, but South America has been pretty uh had some issues, and I know the Amazon river basin's been a little tight. Could that be a reason we've seen some, green on the board this week? I don't know, but I thought, do we want to do our stories first before we run through the numbers there, Joe?
Sure. Jump right in.
Yeah, so we've got Trump coming out and saying he's going to be posing a 200% tariff on Deere imports from Mexico. Former President Donald Trump on Monday threatened John Deere with 200% tariffs on imported machinery for moving jobs and manufacturing to Mexico. Deere announced in 2022 is moving some machinery to Mexico, machinery production to Mexico, excuse me. And this year, Deere announced plans to build skid steers in Mexico as well. At the same time, Deere has announced cutbacks of more than 1,800 production workers at facilities mainly in my state of Illinois and in Iowa. Deere has pushed back on criticism and is committed to U.S. manufacturing, highlighting that the company has invested more than $2 billion in domestic factories since 2019. Deere also noted the company has $27 billion in total U.S. manufacturing capital and employs roughly 30,000 employees across 60 facilities in 16 states. That's nothing to sneeze at. But hey, cutting their workforce by 1,800 isn't either. In remarks on Monday, Trump said if he wins in 2024, any Deere machinery brought back from Mexico, and I would assume any machinery, period, right? Because this isn't just for John Deere, would face a high tariff. I'm just notifying John Deere right now. If you do that, we're putting a tariff on you, is what he said. They think that they're going to make products cheaper in Mexico and then sell it for the same price as they did before. They make a lot of money by getting rid of labor and our jobs. Really great name, because John Deere is a great name. So yeah, we've got jobs again going abroad. We don't love to see that manufacturing of good American products go anywhere but here. And Trump's campaigning on putting more, I don't want to say a trade war. Would that be a trade war with Mexico, Joe? Because I'm going to play devil's advocate here. And while I like tariffs on manufactured products from other countries that, keep manufacturing here, I like that idea, right? Protect our production here. Problem is when, things trickle down. But what if we see Mexico come back on a corn front and hit us on corn side? If they retaliate with their own tariffs like China did, it wouldn't be necessarily a great thing. But hey, we'll see.
Yeah, that tariff game, you enter the land of unintended consequences pretty quick.
Right.
Sure.
Just playing devil's advocate there, right? But hey.
And I'll tell you, in the next story, you see something kind of similar when you talk about unintended consequences. Bills introduced to expand 45Z tax credit restrict to domestic feedstocks. Todd Neely from DTN, bipartisan federal legislation that restricts eligibility for the 45Z clean fuel production tax credit to only renewable fuels that use domestic feedstocks has been introduced in both sides of Congress in a push that seems to be gaining steam. Biofuels producers and others continue to wait for the U.S. Department of the Treasury to release guidance on 45Z. At the end of last week, a group of biodiesel producers asked Treasury to release the guidance out of concern that industry could be forced to shut down without it. Senators introduced companion legislation on the House side. 10-year credit will give the ethanol industry the time and financial incentive to build up the infrastructure needed for the U.S. to be less reliant on foreign fuel, open new markets for farmers, and increase ethanol production across the Midwest. Senator Roger Marshall said in a news release Tuesday. However, we recently learned that 45Z has a glaring flaw that needs to be fixed for farmers wanting to sell feedstocks to the biodiesel and renewable diesel industry. If 45Z goes into effect as is, taxpayers will be massively subsidizing Chinese used cooking oil and would all but eliminate the use of homegrown soy or corn oil in renewable diesel. Now that is something, and when you go back and look, so you think how much UCO, used cooking oil, can we be bringing in from China? And I'll tell you, Dan, I don't have the numbers in front of me.
I don't think we want to,
but it's insane.
Attempt it, right?
It's a massive amount, and I don't know enough about the politics of it to wade in too far. But in times like this, when I looked across my right shoulder to RFD TV, and they were talking about farmers under duress and the kind of support that could be coming down the pipe for farmers that are in dire financial straits, the idea that we're bringing used cooking oil in from someplace like China in such massive quantities, it would seem to me. It would seem to me that somebody should be introducing legislation that says we're going to bring in any kind of cooking oil that we're going to bring in from any other country should be cooking oil that originated as a product from the United States.
So if you want to send us tariff word,
if you want to send us
that's another shot to fire, right?
If you want to send us cooking oil that's used in your country, it should be from some corn or beans that you bought from the United States.
That's an interesting concept.
You know what I mean? And in this day and age,
Yeah.
that is not impossible. They know how you can track that. And I think that, and I don't even view that as protectionist. I just view it as common sense. If you're going to bring all of this cooking oil back and impact the
Well,
US producer.
we can go a step further, Joe. We know how much they buy from Brazil, right? We know how much they buy from us, so we can just basically charge them based on that, right? Like we know their usage. So okay, if you're dumping so much here, and we know so long as we know how much that is, we know for a fact how much of that can come from us or not, right? And you can play a game. All right. So you get hit with or have to, blah, blah, blah. I don't know. Maybe it becomes tariffs, maybe it becomes limitations, but I agree with you. I think there has to be some kind of, I get it, right? If they want to buy our beans, they're stuck with a lot of oil they maybe don't want, but they also, that used cooking oil, though, could be coming from palm oil in Malaysia, right? Or any number of other origins that it's just unused cooking oil.
And who knows what else
Unfor-
is in it? You know what I mean? It's like,
certainly.
just doesn't
I
make
mean,
any sense.
granted, I don't think that stuff's going to go be used for human consumption. So I'm less worried about quality, right? But like, agreed. But it's also coming back to compete with things like our own biofuel needs and our own demand for those oil seeds here in the future. So I wonder if China doesn't just start using it or producing some kind of biofuel from it themselves. I don't know why they're not doing that, but if that's the use for it, and we're basically not wanting it on our markets because it's taking the place of other, consumables in that biofuel production line that we, support our American farmer with. I get that. That makes sense. But man,
Absolutely.
that
Absolutely.
stuff is a tight game. There's who knows what the politicians, what game they'll drum up, but hopefully that one doesn't get ignored.
Let's jump to the numbers. How about Dees corn for the week? We opened at 401
What
and
a
a half.
great week.
The high 419 and 3/4, low 401 and a quarter. Last trade I saw was 412 and a half. Are we going to say that that's not technically an outside week? So your low was below the low, your high was above the high, but you closed kind of within the candle there. But either way, right? Up
Hmm.
15 and 3/4 for the week. Funds coming into today estimated to be short about 110,000 contracts. Still, that's not a small number. I'd be interested to see what happened today. So we'll be sure to check that. But so what do we got notable on this chart, Dan? I got a July 24th high at 423 and 3/4. I got a 100-day moving average at 429 and 3/4. What
Hmm.
else do we see here?
Well, we could consider ourselves in a bit of an up channel now, right? And then upper bounds of that channel is going to be right around that 100-day moving average you just mentioned at 429. On the lower bounds, we've crossed over that 55-day. The 18-day has crossed back over, giving us that bullish crossover of that 55-day moving average there. We talked about that last week, and not loving being below it, but we snapped back through the highs that we had made right when we had first pushed above those moving averages. So this to me says we went above 18-day and 55-day. We stayed above them. We came back down to test them as support. We supported the market enough to where they gave us a bullish cross back over, and now we've progressed back up to tag a new high. I mean, that's to me the definition of a market kind of flipping the script technically and becoming a little more bullish. Now, until we break out of that July high you aforementioned there, at from July 24th at 424 and towards the 430 area, there's still maybe some resistance on this chart, right? But support has proven itself this week, and I think that's what this week was all about for corn.
Can we
Support
draw a
was
trend
there
line?
on the
Can we
chart.
draw a trend line off of that low from, like, what was that? August 26th, August
August
27th
26th, basically through
touches.
then September 12th and the 20th. Absolutely. That's the lower bounds of that channel that I guess I mentioned. Yeah,
And
that
and
trend
so
line is there.
what does that come through if you draw that trend line up? Does that bring you like 408, 409? The low from 2 days ago, actually, right?
Yeah,
Once that line gets up there somewhere in there above 405, but below 410. That's
yeah,
that's pretty interesting.
yeah. And right around that 18-day moving average again, right? It's very interesting. It's funny how these technicals all line up at these places. It's almost like somebody planned it, right?
We said last
Um,
week, if we didn't know that these were agricultural commodities, that chart says, bam, off to the moon we go. right?
Yeah,
But we're
it looks like a cup and handle pattern, what have you. And right, the fundamental picture is what's holding me back from being, screaming, "Oh my God, $5 corn, get ready, get
right.
ready, get ready," right?
Yeah. Yep.
I know there's a lot to chew through on the way back up, but I do think we're very close to pushing through a level that maybe, I mean, all the reason we might need is those funds to cover. But you pointed out very astutely before, we need to see how much they're still short. We need to see that number have dwindled because that's effectively the rocket fuel right now. And once that rocket's out of fuel, who's left to buy this market, right?
Yeah.
Um,
Well, so what I
and
wonder is as you get out over this resistance, and those are big ifs, right? If we get out
yeah,
over these two levels of resistance, we don't really see a whole lot going on here until 458. Swing high around 478. I don't know. It's difficult for me to extrapolate this technical picture with the fundamental backdrop, right? And that is almost bullish, right? Because if you or I can't get our brains around the idea that this can rally, then maybe maybe
it's probably
yeah,
going to
yeah,
rally.
maybe
Yeah.
we're on the verge. Yeah. So I mean, I don't know. We've both been doing this for a very long time, and maybe have a handle on the fundamentals, and certainly have a handle on the technicals. But uh, should I would caution. I would, and this is just me talking, right? But I would caution that if momentum wise if the momentum begins to become arrested, or we start to lose momentum, that the ensuing downside, we've seen that before, right? And we look great, we
Mhm.
look great. We say, hey, oh, technically on this chart, it looks terrific. But then you get 8 days worth of downside that takes out another buck. And I think that I recognize that all of the people that we talk to are exceedingly busy, either harvesting or gearing up to harvest. But we still got to be paying attention.
Yeah, absolutely. You can't fall asleep at the wheel here. This is an opportunity to get some sales done if you haven't before, right? And the rally, if this is a bear market still, which for all intents and purposes, from our big inflationary highs in the row crops a few year or you like last year or a year and a half ago, it's been so long now, to now, we have to realize that if that's the start of a prolonged bear market and this is a bull bear market rally, they can be very sharp, very swift. And while you're sitting in a combine, the market can be up 50 cents and back down again, and having missed the whole, chance to do something. We have a news report on Monday and some extra volatility maybe that this market's going to see. Just be prepared, right? That's all we're saying.
That corn stocks number, analyst estimates 1844 in
Hmm.
terms of million bushels versus last year's 1360, right? So
Yeah.
corn stocks numbers coming in a lot higher than they were last year. Uh, Guys really got to be paying attention. Can I jump to beans? How about beans?
Yeah, let's do beans.
Nove beans weekly opened at 1012. High was 1069 and a half. Low 1012. Last trade I saw was 1066. That's up 54 on the week. Funds came in short, just under 100,000 contracts into the day today, and we'll have to see where that is this afternoon.
Hmm.
July things that jump out at me again. Your July 23rd high, 1086 and three quarters, right? Then your 100-day moving average, which comes in below that 100-day moving average, I have that at 1080. Do you see that same thing? 1080 for the
Yep.
100-day moving
1080.
average. Beans overbought.
I mean, you're also up against the trend line of a channel too, right? Corn's in a channel higher, wheat's in a channel higher, and beans is banging against that same, similar channel, but up against its resistance. Again, like you said, 1080 for that 55-day moving or 100-day, excuse me, moving average just above. Yeah, a little overbought in terms of how far we've run. The RSI is overbought too, but
Outside day up.
we were so short for so long. Are we really overbought
Right.
anywhere?
Well, that's a very
You
good
know?
point. Very good point. And with, tempering this technical bullishness with our ideas of the fundamentals, and your bean stock number 351 was the analyst estimate versus 264 last year. I mean, that's a your stocks to use in beans. I don't have that stocks to use number in front of me, but it's going to be pretty big, right? There's some questions about what kind of yield numbers we're going to see. I've had some stuff that's all over the place. Some guys with really big numbers, some guys with just okay numbers. But if this stocks to use ratio in beans comes in where we think it's going to come in, you still fundamentally, I mean, it's difficult, and it's difficult to talk that in the face of what is a beet red drought map in Brazil, right? Rain's allegedly coming down the pipe, but until they get here, that's a lot of red.
You got wet weather here in North America inhibiting a harvest. You got rains down South America, no droughts, down South America. I mean, it's a double-edged sword right now for beans. This is the reason it's up double digits today, right?
Wheat. We were supposed to do wheat first because wheat kind of a lackluster. We're going to fizzle out here in the numbers.
Okay.
Opened the week at 570 and D-Sweet. High was 596 and a quarter, which was terrific. Low was 569. Last trade 580. Not a terrible close. That just leaves wheat only up 11 and a half on the week. Funds came into the day short about 20,000 contracts, which is interesting. They're hanging on to that piece of that short position, that short theme in wheat, while wheat supplies appear to be getting trimmed globally. But the Russians keep offering it at prices that are so attractive, the rest of the world can't ignore it. I got a 913 high on that chart that comes in at 598 and 3/4. 100-day moving average at 608 and 3/4. Is that what you see? Lackluster price action in comparison to everything else, but wheat could be building a story.
Yeah, and you can make cases for a little bit of a head and shoulders pattern. You don't want to see Chicago wheat get below 560, but you know what? It's not getting below the 18-day moving average right now, which comes in at around 578 and was supportive today as we close back and still above it. 55-day, we've been holding above that. I mean, it's a story of breaking back above those moving averages, holding them here over the last couple of weeks.
I thought that was interesting too. And even though this price action appears to be lackluster, we're holding at levels that are pretty decent.
But if they give way, we can have the story of why and how we broke down too, right? That's the problem here. You'd love to see this get continuation. You'd love to see wheat get up to that 18 or 200 and 100-day at 608 and 617 respectively.
Same thing with corn.
Yep. But that's a big ask, because breaking back above those levels on the chart does look like you're going back in that range that we were in from March through June of last year, or earlier this year, feels like last year. Where we rallied from, $6 up to 760. So not saying we can't get there, but back above $6, back above $6, $5.90, $6 here. The market proved before it could rally $1.60, higher. So not saying it can or will. I'm just saying it has in the past.
But in order for us to get over those levels, wheat is going to have to eat, right? I mean, that's going to have to really be some stellar technical performance.
So far,
yeah, for sure.
It could be a big reason why corn was kind of dragged down here into the end of the week when beans got a little stronger. But, we'll see if that continues into next week as well.
Yeah, good point. What else did we miss?
We could give a shout out to cattle here. December cattle closing the week higher, October as well. Fats, well above all moving averages at this point. I mean, the big level that I'm looking for there is a retest of that downward sloping trend line. We're in a really big range on cattle, right? 175 to 190. We're at 184. We've transversed that range. We're above all the moving averages. Overbought perhaps in the short term and could use a pullback on the charts, but generally speaking, I think we're in a period of price discovery higher. Feeders are not the leaders here, which makes me really curious as to what's going on with it, within the cattle complex itself. But you've got October feeders here closing up, barely up on the day, but also finally starting to crack back above that April 1st low that we had broken below and gapped below here in July. And hey, we're starting to crack above some of those major moving averages, but again, probably a big move up towards 260 to catch up to the fats if it's going to do so. Otherwise, I'm a little worried about, the fact that cattle and the feeders aren't leading here. And if they're the canary in the coal mine for, what the complex is going to do over the next 200 days. But
I'm looking at November, and the volume has been very nice. Take a look at that November chart and tell us what you think about. And so we put in a low here on August 9th, I think it was. And this chart this chart, I don't know that I can debate the feeders not being the leaders part. I think you may be right about that, but that low from the 9th, I mean, we've been positive almost every day.
I guess, right. If you
What is that,
start from that
September?
moment, they have led, but it's like, I guess they got more beat up than the Fats when you really think about it. Um, Earlier this year, in those summer downturns that we saw, the
But I see what
feeders
you're
really
saying.
took out lows, right? That the
When you look
Fats
at
didn't.
this, within the context of price action from July, where we were bouncing along the high end
Hmm.
of the range, and then we had fallen apart, this has kind of been a grinding, stuttering rally, significant though it is, right above 225 to 245. That's
Hmm.
big price action, right? But
Yeah,
I see what you're saying here is that we're really it doesn't look dramatic or as convincingly dramatic as the downside was, right? And that's kind of the way cattle will
right.
work, right? Is that you'll go down, extend your range lower, and then bam, all of a sudden you're back up to the top end of the range. And this seems to be working very hard to get there.
It does. It does. And hey, I mean, that's price action and price discovery for you in a nutshell.
You know it. You know it. Question of the week. We might have to come up with our own, huh?
Yeah. Favorite board game or card game? Boy, I was always a big poker player in terms of cards. Always loved poker because it's the one card game where there really is an element of skill involved. Risk is certainly a big factor of it, but it's nothing better than the skill of a good poker game. But board game, I'm a huge Risk guy. Love Risk.
That
Hmm.
makes sense.
It's like hours of Risk with my nerd buddies
I
throughout
was in a
grade
barber
school.
shop yesterday and they were explaining some of the finer uh, poker tactics to me or a lot of terminology. And
Ooh.
I finally just had to cop to it. I said, you could be speaking Mandarin Chinese. I have no idea what you're talking about. So I think I got to spend a little more time playing poker, but I didn't know enough to even understand what they were saying because I don't get out and gamble as often as I should, maybe. I don't know. But shout out to my nephew who is an accomplished poker player. And
Hmm.
you can spend hours and hours doing that, can't you, Dan? I mean, it's just people love it.
Yeah, people do. People do. I don't have hours and hours to do anything anymore, but yeah.
I think if I had to choose a board game, and I don't because there is Miller Lite and women, so I don't know that.
Because there are far
Yeah,
better choices for a
yeah,
grown
yeah.
man to.
Bicycles, Miller Lite, and women I haven't met yet. But were I forced to, like maybe if I had to go to prison, or we were somehow trapped on an island that had a Scrabble board, I might play some Scrabble for sure.
Rebel. All right.
I might play some Scrabble, and then I would make up a bunch of words and cheat, just in case you guys didn't know. And so maybe
Right. I
that would
mean,
be.
hey, that's okay. Then you would be great at poker. What are you talking about? I mean, that is the essence of a bluff right there, right?
I
You
should
just
try
got to
that.
sell your hand enough to make somebody else believe it.
That's so funny. That's so funny.
Yeah. Well,
Terrific.
thanks for
Well done.
listening to the Zaner MarketCast today, everybody. If you need more, just because you can't get enough of us, you can
Can't
follow us
get
on
enough.
Facebook at Zaner Ag Hedge or on Twitter and LinkedIn at the Zaner Group. If you have any questions you'd like answered on the show, there's a link for you to do so in the description to do just that. Just follow the instructions and we'll answer it right here on air. Thank you again. And be sure to like, comment, and follow the podcast to not miss a beat. And we'll be back with you as price action develops, everybody. Have a great weekend and take care.
Have a great weekend, everybody. Thank you.